866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern.
What is
CFRN, a community of believers who trade for a living.
Is the first laptop in the world that works on VO.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 19th day of September, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. Special show today. Mike Reed, the Trade Stalker, will be joining us at the bottom of the hour. Okay, so stick around for that. I want you to hear what he has to say. Okay. Now, let me throw a chart up real quick. Chart. There we go. There's a chart. Okay. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, just grab any internet-connected browser, point it to youtube.com/cfrn/live. There you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right. Michael's going to jump in here real quick and do a recap of everything that happened in the live training room today.
Wake up.
I'm sorry. Hello?
That was Mike Reed.
Oh, I thought you were dialing in at 12:30. Mike?
My bad.
Yeah, I think he is.
No, it's okay. Just give Michael 5 minutes to do the recap, and then you can come right on, okay?
Yeah.
Okay, I didn't know my microphone worked so good. Okay.
Yeah, no, you sound great. Just give him 5 minutes, and then we'll be right back with you, okay?
Sure will.
All right.
Okay.
All right, Mike, you
All right.
ready? Michael?
Yep. I got it. Here we go. Bring it over here. And do that. And do this. Okay. Here we go.
All right, it's all yours. Take it away.
All right. I got it. Good afternoon, everyone. Today is Thursday, the 19th day of September, 2019. If you have not taken a free trial with us and you want to, go to the homepage at CFRN.net, and right over here in the right-hand column, it says 5-day free trial applied at CFRN.net. Click on that, and you'll be brought to this page right here, the EminiTrainingschool.com page. Now, you can go directly to this page if you want to, but if you click on that, you're going to be brought here. All we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, you will not get a free trial because we don't know you took it. All right? All right. So here we go. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 19th day of September 2019. Today we made 3 ticks in the euro, 17 ticks in crude. We lost 7 in gold. Excuse me. And that put us at 118.75 on the morning session. Today, it took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 11 trade opportunities this morning. On the month now, we're at $2,970 over 13 days, averaging $228 per day. That's 1 contract, 2 hours per day. On the year, $27,737. That's over 169 days, averaging $164 per day. Again, 1 contract, 2 hours per day. Okay, now let's get into what happened this morning. Things really slowed down at the end. In the gold, let's see. Yeah, I'm not showing my stop out in the gold. I really did stop out. I'll show you where it was. In the gold, we started out here. We just got 1 tick on that trade, and we missed that one. And right over here is where we stopped out, I think. I took a short right here, and it stopped me out pretty much to the tick. Oh, right there. Okay, and this was during the break here. There was another shorting opportunity right there, and a long opportunity there that didn't go anywhere. That was gold today. It was pretty quick. I mean, not a lot happening. All right, the euro, we got a couple of trades on the euro. One was a break even, one was +3. And during the break, there was 1 trade opportunity right here. Okay, that would have been profitable. And on the crude, you know, I told you yesterday this 58.60 level is going to be a magnet. And it was over and over and over again. And I'm scrolling. Here we go. We started out with a break-even trade on crude. Then we had a +1 right there. Then we had a +9 to put us up to +10. Then we missed a couple of trades there, and we had a break-even there, and another break-even there, and a +3 there to put us at +13. We missed a nice long right there. I wish I would have gotten that one. And I got a +4 there to put us at +14 and +17. I missed that one. No, when I say I missed, I mean I didn't get filled. And during the break, there was really just 1 long trade right here that would be in profit right now. The ES, we didn't do anything with the ES. It started out trapped between 2 weekly trading zones in here. And then once it finally broke out of those weekly trading zones after the first hour, it really didn't give us any trade setups. And then it dropped right back into the zone. So there was really nothing there with ES. Okay. All right. Now. All All right, that was it. That was a quick recap. Let me go back here to this. All right, again, if you're going to read the spreadsheet, you'd read all the CFTC risk disclosures down at the bottom. Today is the 19th day of September 2019. We made 3 ticks on the euro, 17 ticks on crude. We lost 7 ticks on gold. So at plus 118.75 on the morning session. Today took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract and we took a total of 11 trades. So on the month now, sorry about that. I'm having work done on my house. So on the month now, we're at $2,970. That's over 13 days, averaging $228 per day. On the year, we're at $27,737. That's over 169 days, averaging $164 per day. Okay. If you have not taken the free trial with us, go to the homepage at CFRN.net. And right over here, it says 5-day free trial, apply.cfrn.net. Click on that and you'll be brought to this page, eminitrainingschool.com, where all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge. So you can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. Once you hit that confirmation link, then we know you took the free trial. So you have to hit that link. Okay. Okay. All right, Mike. You can come back on. Oh, sorry, I gotta finish that. With that, we can pass it back up to Fabulous. Okay. All right. With that, we can pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
All right. Thank you, Michael. What was the recap of the recap?
Today, it took 12 minutes and 3 trades to get to $100 per contract.
That's a good bingo. All right. Okie doke. So you got to take off, right?
Well, I can hang for a little while.
Well, I mean, you're welcome. No problem. All right. Mike Reed, welcome to the show.
Dwayne, can you hear me?
I hear you.
Oh, okay.
How you doing, man?
I'm hanging there. I'm getting garbled here. Something's up. Can you give me just a few minutes to try to?
Yeah. You can call back. Just call back in whenever you're ready, man.
It says it's trying to log me out of GoTo webinar, and also my headset's garbled. So
hey, why don't you just use your phone and just call in? Just call the number.
Okay.
That might be better.
Call
the number it tells you to call. The number. Hang on, I'll tell you the number. Hang on just a second.
Then it has code. I don't think I'll be able to type it in.
It's in the email.
Okay. Oh, okay. All right.
If you want, if it makes it easier, I can call you and just put you on speakerphone, and we can do it that way. If that works better for you.
Okay. All right.
That work better?
That'll work.
Okay.
All right.
All right. You hang up,
I'll send you
and then I'm gonna call you here in about 3 minutes. Okay.
Oh, it's gonna take me a little longer, I think, Dwayne. I'm sorry, but you can give me. This is taking a while on my end. My
when you're ready, you call my private line. All right. The number you have for me. All right. Okay. Sounds good.
Okay, yeah.
All right, buddy.
All right.
Take your time.
Okay.
All righty. Okay, here we are, guys. We're taking a look. This will be our last look at GCLV 19. Crude. We rolled forward as of yesterday to the X contract. I got it wrong in the Concierge Trade Alerts last night. Then I changed it, but I changed it to the wrong month. And so then I went back and I changed it again. And I think we got it. Just want to go over 2 things here real quick, because the alerts that we're going to talk about here for just a second, those are alerts that came out for the V contracts, but you probably already figured that out. Now, let's take the first one. Okay. The first one was a Concierge Trade Alert. The other one is a Logic 247 alert. I'm sorry? Okay.
I think that was Mike battling with his phone.
Yeah. All right. Okay. So, Concierge Trade Alerts, this one here, are based on prior price behavior. Logic 247, current price behavior. Okay. All right. So the alert said sell 60.60. Now I'm going to bring that up real quick. I want you to see it. What night did that come out? Was that Monday? Let's see. Here we go. All right. All right. So on the 16th, at 6:35 p.m., 60.60. Now, we have a weekly trading zone at 60.70/75. We had this huge red candle. Marguerite, I'm going to disconnect you until you call back in, okay?
Good. Thank you.
Yeah, you betcha. All right. So we had this huge red candle coming down through the zone. Now, I've told you that only three things can happen at a weekly trading zone. The most likely thing to happen is this, consolidation, okay? The second most likely thing is rejection. And that's what you see here. Price reached up, touched the zone. Think of a stove. You reach over and you touch the stove. Turns out the stove's hot, and so you snatch your hand back. Whereas you might leave a little skin on the stove, this leaves a wick touching the zone, okay? So, most likely, consolidation. Second most likely, rejection. The third and least likely, but it does happen, is the slice, okay? Now, when price slices through a weekly trading zone like it did right there, here's what we expect to happen. As that move runs out of steam, now keep in mind, as price was coming down, even though it's a huge, fierce red candle, we still expect the weekly trading zone to be good support until it isn't. In this instance, we can see that it failed to be good support. We sliced through the zone. When the move runs out of steam, we anticipate price pulling back up to the zone that it just sliced through. Because it failed as good support, we now want to see a market test as to whether or not it's going to serve, for our purposes, as good resistance. Slice, pull back to the zone you just sliced through, and in this case confirm good resistance, and then continue in the direction of the slice. This is a beautiful example, okay? The swing high was 60.71. So it reached up, it touched it, it confirmed good resistance, it was rejected, and price continued in the direction of the slice. Okay. Now, over here, now remember, this is based on previous price behavior. Okay. Alert number 2747. Consider being short GCLV 58.90 to 58.80. Trail if possible. Weekly trading zone below is 58.10/15. I discovered yesterday in a mentoring session, and then again last night in the discussion group, that part of what I explain each and every day, after day, somehow, the message didn't get through. I don't know how, because, well, I'll tell you, I thought that just simply repeating something over and over and over would do the trick. Because I don't draw, so I can't illustrate it, and I don't have a camera pointing at me, so I can't use wild hand gestures like Bernie. So I put it up on the screen, and then I repeat it over and over. And you've all heard me say again and again and again, well, two things. Of course, important prices and important areas are almost always tested. And we can see an example of that right there. Okay. We triggered, pulled back up to the trigger, got above the trigger, triggered again. Okay, important prices, important areas, almost always tested. Number two, price is always trying to get to a weekly trading zone. Either the zone overhead or the zone below. Once you understand our methodology and how to read the indicators, it will become blatantly obvious with just a glance at your chart which zone price is currently trying to get to. Okay. Now, this process begins Sunday evening at 6 p.m. Eastern. They open the gate, and there goes price. Looking for a zone. Okay. It's going to try and get to the zone overhead or the zone below. And as I said, when you understand what it's currently trying to do, well, things become pretty simple. Not easy. Nothing about trading is easy. But it can be simple. And so that's what Michael and I have attempted to do, is we've attempted to make this thing as simple as we possibly could. Because we still wake up at night in cold, I speak for myself, I still wake up in a cold sweat sometimes in the middle of the night. I've had a bad dream about all the stuff I went through in 2005 and 2006 and into 2007, trying to figure out what the heck is going on here. I could see the incredible opportunity. I could see the possibilities. I just couldn't figure out how to be consistently profitable. And back then, there was nobody offering to teach me how to trade. I could buy PDFs off the internet. I could buy indicators and oscillators. Lord knows, we bought every one we could find practically. And then when there was no more to buy, we started writing our own. But that wasn't the answer. We were headed in the wrong direction. With each new filter, see, we were always just 2 mouse clicks away from greatness. But we were always 2 mouse clicks away from greatness. And it certainly seemed that if we could just layer on one more filter of some kind, that would do the trick. Turns out we were chasing a moving target price, right? And so if this filter gets you a little closer today, then it's going to hurt you tomorrow or confuse you tomorrow. So it was just, we were going the wrong way. You've heard the story. We started getting rid of things. Painful process. It's painful for the ones you paid a lot of money for. And it's painful, especially painful, for the ones that you spent a lot of time writing, coding. Now, Michael, he's real good with the code. But even when you understand how to do it, it's a time-intensive and laborious process. All right. Slice, pull back, confirm. Now,
speaking
price,
of that,
yes,
I'm getting MetaTrader 5 right now.
Okay, good. All right, great. Okay, so if price is always trying to get to a weekly trading zone, if that's true, when price triggers here at 60.60, where is price trying to go? And I'd really like somebody to type it into the chat box. I know a lot of heads are nodding. Okay, yeah, I get it. Please move on. No. Because I got to make sure that, everybody gets the memo, because some of my people who've been with me for some time had not fully gotten the memo. And so it's really important. So humor me. Somebody, hopefully you know the answer now. When price triggers here, what is it doing? What is it trying to do? Where's it trying to go? We're going to sit right here. So somebody types the answer into the chat box. Come on, don't be shy. If you're wrong, I won't use your name. If you're right, I'll give you full credit. All right, let me check the chat box. Anybody? Anybody? All right, so nobody's going to answer? Nobody knows. Because that speaks volumes right there. After what I just said about price, no one in the audience, when this triggers, no one knows where price is trying to go. Thank you, Donnie. That bell's for Donnie. Donnie, you got it right. Yeah, it's like it's trying to get to the weekly trading zone. All right, let me say it again. Price is always trying to get to a weekly trading zone from Sunday evening at 6 p.m. Eastern until the following Friday at 5 p.m. Eastern. Price is always trying to get to a zone. Okay, so from 60.60 to the zone below. Alexa.
I'm having trouble connecting. I'll keep trying.
Oh, yeah, I forgot. I got Alexa problems. I lost my internet last night and then I got it back. So, gee, I think I don't have a calculator anymore. I'll figure it out. I'll do it on my own. All right, the zone down there is 5810/15. So, if you take 60.60 minus 58.15, that's 245 ticks. From here to here, 245 ticks. At $10 per tick, $2,450. Okay, per contract. $2,450 per contract traded Okay. Now, again, that alert came out on the 16th at 6:35 p.m. Eastern. It triggered on September the 17th, the following day, at 9:30 a.m. Eastern. So what was that, about 15 hours later, give or take? Yeah. Okay. Let's go to alert number 2747. Now, this belongs over here. Okay. All right. Number 2747. That's this one. Consider being short 58.90 to 58.80. Trail if possible. The weekly trading zone below is the same, 5810/15. So when I was talking to someone yesterday, and I'll paraphrase the conversation here to get to the point. Bill, did I miss something? 5810. Oh, okay, you were answering that question. All right, thanks, Bill. Yeah, Bill got it too. All right. I asked the question. I said, why didn't you trade this alert? And we're talking about number 2747. Why didn't you trade that? I mean, there was a whole long discussion prior to it, and then it led up to this, and so then I asked the question, and the answer really took me by surprise. I mean, it truly did. The answer was, well, I didn't take it because I didn't want to risk $300 to make $100. And my response was, well, I don't blame you. I wouldn't want to do that either. Anytime you come across a methodology or a strategy that tells you it's a good idea to risk more on a trade than you can, visibly see as a potential realistic profit, that's bad math. It's bad science. It will eventually put you out of business. As long as it's quote unquote working, and I don't particularly like that term, but as long as it's working, well, everybody's all smiles. But catch 3 or 4 trades in a row that take you to that maximum stop out. How many days are you going to have to be perfect, spotless, without blemish, to just get back to break even? It's going to take a while. All right. And then my mentee in the mentoring session, he said, well, but that's what it says. He goes, it's 58.90 to 58.80. He goes, that's 10 ticks. At $10 a tick, it's $100. And I kind of sat there just a little bit shell-shocked because I realized I had failed somehow. And it wasn't just this one individual, because last night somebody in the discussion group, a couple people confirmed that they were under the same impression, that this trade was all about nothing more than taking 10 ticks or $100 out of the market. It completely failed to embrace the tip. Trail if possible. Okay? Trail if possible means don't get out at 58.80 if you're in a perfectly good trade and the chart is not giving you any reason to exit the trade. You very much should stay in the trade, because we're patient, we exercise self-discipline, we wait around, we walk the dog, we make sandwiches until a trade sets up, what we know to be a high probability trade setup, and then we execute. We don't click the mouse at everything that moves. I tried that in the beginning. In the beginning, if I didn't have at least 2 hooks in the water at the same time, I didn't feel alive. Okay, I think Mike Reed's ready for me to call him, so I'm going to call him. And I really want you guys to listen up to this. Most of you know who Mike is. Let me just finish this real quick. All right? So, I'll just cut to the chase. This is not a $100 trade opportunity. Let's see, 58.90 minus 58.20. Well, that would be, so it's 75 ticks, okay? 75 ticks. At $10 a tick, that's $750 per contract traded. Now, so here I had someone who thought this was a $100 trade, and they thought this was a trade with $100 of profit potential. When the truth is, the profit potential here is $2,450 per contract traded. This is $750 per contract traded. Concierge Trade Alert based on prior price behavior. Logic 247 based on current price behavior. Okay? This WTZ below, I don't put that into every alert. Sometimes I do, just because I was trying to make sure that everybody was staying on the same page. Turns out we were in different books. So I put it in something, but it's the way I saw it was just it was understood. because I'm always saying price is always trying to get to a zone, blah, blah, blah. And you've heard me say, some partners just trade zone to zone. That's all. They just trade zone to zone. Okay, very nice living trading zone to zone. As you can see, price went from zone to zone. How many times you heard me say it? Price went from the zone to the zone, back to the zone, up to the zone, back, right? Okay. All right. So let's carve it in stone. Whenever you see an alert, whatever prices are in that alert, and whatever the initial target is, okay, right here, 58.90 to 58.80, you look around, and if there's nothing threatening, nothing about to crash down on you, you don't abandon a perfectly good trade. Okay. Now, when we're training you in the live training room, in the beginning, we're going to teach you to have a hard price target and get out at that hard target. Okay. As you grow and you watch Michael and you see that he leaves the hard target off and chases it with his stop loss, you'll learn to do that in time as well. Okay. But if you're looking at one of our Concierge Trade Alerts or one of the Logic 247 alerts, keep the hand away from the mouse until you reach the zone below if it's a short, the zone above it's a long, or the chart gives you a reason to exit the trade. All right, let's call Mike. Now, if anybody has any questions on that, please let me know. All right. Here we go. Phone ringing.
Hello, Dwayne.
Hey, Mike. Welcome to the show.
Thanks. Excellent. It's been a while.
Brother, it's been too long. What's it been now? About maybe 7, 8 months? 9?
I think so, yeah. It's been quite an ordeal since then. So,
Well, you were getting moved. You got a new house, and moving. That's got to be the worst job in the world. Every time I move, I haven't moved since 2005 or 6, but every time I do, I swear that's going to be the last time I ever move, because once you're in a place for a while, you just collect stuff, and then pretty soon your stuff has its own stuff, and you get behind that, and it's hard to just back a dumpster up and just fill it up.
that's about the way we had to do it, I tell you. That's so much stuff.
Have you had much time to watch the markets of late?
Of late, yeah. Much more than, well, I've been able to have it on my own. I was at the other, I would say this. I was at the other place in transit for about 6 or 7 months. I was set down. And anyhow, I had access to one laptop during that time, which had my main screen, and I go keep my spreadsheets and stuff up to date. So it's in tune with the market price on a daily basis, intraday. But I had no access to like news or whatever until I had one television set in the place. So.
Oh my goodness! What? Who only has one television set these days, right?
I know. Yeah, right. And we're at our mother-in-law's place, and she's in her 80s.
Mm-hmm.
So her programming choice of the evening would be Murder, She Wrote, Angela Lansbury.
Yeah, that's actually, it's not a bad show. My wife likes to watch it.
No, yeah. It's
Yeah.
a little team and special victims unit or something like that. Criminal minds or something like that. Yeah. So,
Hey, John, can you give me about 10 minutes?
So yeah,
Thank you.
moved over, Dwayne.
I heard somebody.
I did have an eye on the
No,
market.
that's me.
Oh, okay. All right.
I was going to say I have a friend that has no television sets.
Uh-oh.
And he's got 3
I was
kids.
in the hospital, out of the hospital, and that kind of stuff. Since we talked last, so, yeah, for sure it has been. So anyway,
Well, Mike, the big news, I haven't said anything to anyone because I wanted it to be your moment, your hour. You've had an incredible career as both a trader and someone who trains folks to trade. And I've always told this audience and anyone else that listens, a large part of what I know and understand about markets and how markets work, I learned from you. And what I learned from you in early, 2006, 2007, over time, now much of what I learned, I didn't exactly understand it all at the moment, but I was like a sponge, and I was just soaking up anybody that knew what they were doing and would give me 5 minutes of their time. I was soaking it up. And what I learned from you during that period became the foundation of everything that I do today. And so I owe you a lifetime of thanks and gratitude for your service.
All right now. Just building on something that's your work, so I think that was a great deal of adoration for what you've taken from me and build upon, and build a really nice way of making money from the markets. So, congratulations to you.
Well, I just want you to know I'll always appreciate it. Now, throughout our life, we have major milestones. For some, it's getting married or the birth of a child. But you're at a major milestone in life right now. So tell the audience what you've decided to do.
Well, I decided to stop publishing and enjoy a retirement in my golden years. golden years. But yeah, I've been publishing nightly, whatever or not, since early internet days, 1993. That's when I started this way back with a friend of mine.
Now, you said 1993, right?
Right. My stockbroker one is the one that kind of kicked it off. He got me irritated that he wanted my information every day, but didn't want to pay anything for it. So my friend said, well, why don't we just sell some of your advice? So how are you going to do that? How would you propose doing that? He says, oh, this internet thing's kind of catching on. Whatever. So, well, it's up to you. So he thought, well, I'll launch it and see what happens.
Mm-hmm.
So kind of did it under I didn't want to be Trader X or anything like that, but I stayed behind the scenes for a number of years. Anyhow, after a long time of publishing something, it was time to give it a break for a while. I mean, probably pretty good here since you only have so many years left, and I need some time to relax and enjoy ourselves here. I'll be doing my own trading on the side, and send out every now and then some special things, but reports or whatnot. But
well, we hope you're still gonna find some time to come, especially when there's major market events. The door's always open. It hasn't been the same without you.
I think we'll have time to come on the radio more. Put something up for that. So anyhow,
I have a browser open, Mike, for the audience at the tradestalker.com website. And I remember I used to joke with you years ago. I said, if you ever retire, man, promise me that I'll get that domain name, TradeStalker, because as I was just saying earlier in today's show, when I first met you, if I didn't have at least a couple of hooks in the water at the same time, I didn't feel alive. And I learned, it was an expensive lesson, but I finally learned that wasn't really the best way to do things. And the name of your company, of your website, TradeStalker, it brings an image to mind, and I'm sure that's what you intended from the beginning when you came up with the name. But I see the guy, I'm not a deer hunter, but I've seen the movie. He goes out into the woods and he finds his blind or stand or whatever he calls it, and he climbs up in there. The sun hasn't come up yet. He pours deer urine all over himself, and then he just sits there quietly and waits for that perfect buck to wander into the little clearing so he can take him down. One shot, one kill. Trade Stalker. Fell in love with that name then. I'm still in love with it now. Folks, what you see up on the screen here, after authoring the RBI Trader Updates for the past 23 years, I'm retiring. We'll be taking down the site August 31st. Well, you see, today is September the 19th. The site's still here. I could not allow this testament to a lifetime of trading and teaching. I could not let it disappear from the internet landscape. So Mike and I put our heads together, and you're now talking with the previous owner of Trade Stalker and the new owner of Trade Stalker. CFRN completed its first acquisition. We're very happy to announce that you'll still be able to go to tradestalker.com. You'll find videos, you'll find articles, you'll find trading tips, lots of stuff. And all of the work that Mike did, all of his articles and videos, we're going to preserve those till Jesus comes back. Thank you, Mike. Really appreciate everything you've done, all the people you've helped, and my people today, our traders are benefiting today from what you taught me way back in 2006, 2007. So, my friend, the legacy will live on.
Yeah, I appreciate that more than you knew, Dwayne, and we hopefully a good thing going there. I really appreciate you keep me up there, even though we were going to take it down, but I could ask up the office. Most gracious of you, so appreciate it. And strategic partnership.
There you go. Now, did you watch the Fed announcement yesterday?
Well, I heard it. And I watched the action. It went right down to the support and sprang right back up. I was surprised it would go all the way back, but no follow. Well, then today's follow through. I think we have another lower high and possibly on this move.
I know you're on the phone right now. You're not on your computer. When the Fed, oh, you can see the screen? Okay, great. So here's the Fed announcement, 2 o'clock.
I see my screen.
Oh, okay. Okay, so at 2 o'clock, the Fed announcement came out. Price dropped to our weekly trading zone at 29.82/83. Found support, and then it sliced through the zone overhead at 94/95, and it found good resistance at our zone at 3013/14. I was just explaining to the folks what a slice looks like. I just showed them an example, and here's another example from yesterday on the S&P. We sliced through this zone like it wasn't even there. So it failed to be good resistance. So once we found resistance, we still have to test this to make sure it's going to be good support. Here comes price, spikes it, and then continues in the direction of the slice. Only three things happen at a weekly zone: consolidation, rejection, and the slice. And you've seen some pretty good examples. Like there's rejection right there, and there's rejection right there, and there's rejection right there, and there's a little bit of consolidation. Now look what happened here. Even though this wasn't a slice, even though we consolidated, we had a leg, we had a retracement to the zone, found good support. Now we're trying to build a leg up to the next zone, because price is always trying to get to a weekly trading zone, either the zone overhead or the zone below. And just looking at this chart, anyone in the audience, even someone who's brand new, can obviously see that price is trying to get to something overhead versus trying to get to something below. So I don't want to hold you too long, Mike, because I know you got a million things to do, but I just want to thank you once again for coming on, and I look forward to this new dimension in our relationship, in our friendship.
Yeah, that's great. Yes. Well, thanks for having me, Dwayne.
All right, brother.
My granddaughter out there waiting on me.
Okay. Well, you take care. Have a great day, and I'll talk to you real soon.
Sounds great, man.
All right, buddy.
Take care.
Take care.
All right.
All right, guys. I've been sitting on that news for a week, and I wanted to tell you most every day. But I told Mike I thought it would be better for him to come and address his audience, his followers, and just let them know that, we'll all reach a point in our life where it's time to do something different, to retire, whatever the case may be. So if you don't know Mike's story, if you want to be encouraged, if you want to see the power of the human spirit to overcome any obstacle, go to tradestalker.com. On the website, you'll find Mike's story. Take a few minutes, read that. It will give you a newfound appreciation for all that he has done, and it will give you a newfound appreciation for your own life. The 10 minutes it'll take you to go there and read it, you'll reap enormous dividends the rest of your life. So, right after the show, go do it. Tradestalker.com. So we'll be having our folks come in, and we'll be tidying up the site. We'll take down the retirement. We'll put a note that, it just won't say that we're taking it down, because that would just be a shame. Okay, we left off talking about this crude trade. Now, this applies to every concierge trade alert, everything I just explained, and it applies to every Logic 247 alert. I got John calling. Let me open up his mic. John, I'm coming at you. Hang on. Oh, I don't think he can get logged in. I don't see him. All right, hang on. I better call him back. I'll put you guys on hold for a second. Talk to John. See what's going on. Hey, John, you coming on?
I can't get in again.
What do you think the problem is?
So I don't know. I get the thing from you like every day. I click on that and it doesn't want to open.
All right. All right, folks, I'm going to put you on hold a second. I'm going to see if I can get John in. Just stay put. Okay, all right, we're back, and John's on his way in. Now, today's Thursday, Dr. Tom Day. I haven't talked to him yet this morning, but he's pretty punctual that way. And here's John. I see him. I'm just waiting for his microphone to show up. There it goes. Hey, John, welcome to the show. Can you hear me, John?
Hello.
Yeah, hey John, welcome to the show.
Hi. Maybe Dwayne's already stepped out.
No, I'm right here, John.
The big
Can you hear me?
news today, I guess, is
John.
Microsoft has become again the biggest company in the world, except for Aramco potentially. It's over $1 trillion. It's almost 1.1 trillion, and they got a $40 billion buyback. Apple's only got a $20 billion buyback, so it's got a bit of catching up to do. We started out pretty strong. We said yesterday it looks like we're going to break to the upside to new highs. A little bit troubled by the fact that we were up about 50 on the NASDAQ earlier on, and that we've kind of pulled back here. We have to be a little bit careful because from the low of yesterday, we've gone up in 3 waves. Could be a bit of a trap. The Russell 2000 is underperforming. The NASDAQ has sort of come back into vogue, which is good. But the Russell's a bit of a problem. And we're still looking at the risk of some sort of hostilities breaking out over the next few days that could temporarily tank the market. Another down leg, it might take us back down to yesterday's lows, which would give us a double bottom and probably another good buying opportunity. But in the meantime, the market is look, right now, the way it's set up, you definitely have to be a little bit careful. I mentioned this yesterday. It's sort of creating a little bit of a kind of a head and shoulders top, a mini kind of head and shoulders top. And if we were to turn down from that, it could feed on itself. There's quite a bit of complaint. I mean, most of this recession talk has disappeared. There was Leon Cooperman, who's a pretty, very, very highly respected investor, very successful investor, was on this morning and was saying that, the one thing, he was actually talking about a media company, New Media, which he thinks is a pretty good buy. And he mentioned it jumped from 8 to 9, like in about 3 to 5 minutes or so. He made a pretty good case for that. And one thing he didn't mention was the fact that media companies tend to do very well in the 3rd and 4th years of elections. So I would say that's in it. Look, stocks was $8, and he was saying it could have $4 dividend. I mean, give me a break. If that happened, the stock could go through the roof. But I've heard these things before, and they often didn't materialize. So there's always that risk. But he did say that the market was okay for the time being, sort of price to perfection. But there's a risk, there's definitely a risk of something coming out of the left field here, sort of exogenous risk. Or what he said about the Fed, he said he didn't think the Fed needed the cut rates. I disagree with that, because nobody except on this show, as far as I know, has even thought about the fact that, as Trump has said numerous times, the Fed raised rates far too fast. They also went in and at the same time drew down, 50 or 100 billion or something. Took out a lot of money out of the not 100 billion, I guess, maybe it was, 100 billion, out of the the debt, if you like. And now the reason for this emergency funding in the last few days, totaling about 100 and nearly $200 billion, a lot of money, is that because of his actions earlier on, there's a tightness in circulation of cash out there. There's just not enough cash. And a few people have talked about this before as a potential risk, where there could be a cash crunch where everybody's using credit cards, but if there's some sort of a panic, people might want to get their hands on cash. They might go to their banks and try and take out cash, and there just isn't the cash available. That's kind of what happened in the last few days. But putting this liquidity back into the system is actually pretty positive, especially 200 billion. Give you an idea, they were all worried about the Y2K back in in 1999, which was the idea that when we went to the new millennium, 2000, that the system would crash because the software hadn't been written to incorporate the change of date, et cetera, but it never materialized. But putting in 50 billion in 1999 in anticipation of the Y2K caused a melt up in the stock market. So it's quite conceivable that this liquidity injection in the next, that's been going on and is likely to continue, could actually create a bit of a melt up in the market. And let's face it, we had a mini melt up since yesterday afternoon of sorts already. That was pretty impressive. But the fact that we've run into a bit of a brick wall here makes me a little bit cautious.
I came in a little late. You may have already mentioned this, John. But
he was also saying, look, he basically said that the Fed moving too quickly last year basically created the correction from October through December, for no good reason. There was no fundamental reason for the stocks to go down the way they went down. And, I mentioned Microsoft a short time ago. And if you look at the increasing revenues in Microsoft and the net profit in Microsoft, it's almost doubled the profit year over year, and it's just staggering. And that's why it's the number one company in the world today, number one listed company at least. So, and it looks like it's got a lot further to go, and I think it's going to lift Intel up with it. I just ordered the fastest chip in the world this morning for a system I'm putting together because I just can't. It's just not up to the task, the one I've got, and I've tried to use it as long as I can, but it's just, the amount of data coming into my system is overwhelming the capacity of the chip to do its job, and it just needs a quantum leap higher to get the job done. And there's probably a lot of people in the same boat as me, multiplied by maybe millions who are buying, who are saying, I got to have better performance, faster speed. I've got to keep up with fiber optic, et cetera, et cetera. So all of this, and then G5 as well, all of this is going to create increased demand for processing power. And if you look at Intel, if you looked at it, I think of it, it's sort of poised for an upside breakout fairly soon that could take it to new all-time highs. So, but going back to the rates, what Cooperman didn't say, which you heard on this show numerous times, is it's not the fact that the Fed raised rates. I mean, the fact that they eased rates was good, but it's not nearly enough. They should be really shooting to get rates down by at least a point, because we went from 0.25 to 2.25 or 250, so it's about 10 times. It's a tenfold increase in rates, and they did it too quick. It should have been done, quarter or half a point per year. Not 4 times in a year, or 8 times in 2 years. Because it's just has stopped. It definitely put a brake on a really, on an economy that needed to grow more than it had in the last 8 years, and it has grown, but it's been kind of hobbled at the same time. And there's always risks in doing that, and there's always a risk the Fed is going to overshoot. Just raising rates by a quarter, 0.5%, kind of does have an impact on the economy. It's a very powerful thing, and we've really been held back by 3,000, the S&P. We're held back at 27,000 on the Dow, and 8,000, I think it is, on the NASDAQ. So, getting through these levels, hopefully these rate cuts at some point in the next 6 months is going to cause a breakout above these levels, because some easing of the rates and maybe other things they're doing are going to help the economy at least maintain a reasonable rate of growth, possibly even might increase the growth rate. So, but I think if, look, they definitely did. I mean, there's just no way. In a way, that's what happened from 2000 to 2007. From 2005 to 2007, the Fed increased rates from sort of 20.25 from zero levels to they increased rates 18 or 19 times. What happened next? Bang, 2007 to 2009, the Dow gets cut in half. You have almost a depression, and that's what happened.
Hey, John.
It was way overdone, and it wasn't just the Fed. It was this maniac over in the Eurozone. I can't remember his name now, but he was there for most of the Dutch guy who was in charge of the European Bank, who just was fighting the last century's war against inflation. There was no inflation, and he just kept raising rates, and basically nearly destroyed the Eurozone. So, hang on a sec.
Hey, Dwayne. Dwayne, can you hear me?
John, can you hear me now?
Yes.
Hey, Dr. Tom. Yeah, John's having an issue. We can hear John, but John can't hear me. So I just called him.
I was just going to mention it. He was talking about the power of the Fed.
Can you hear me now?
Hey, yeah, John. Yeah,
yes.
No, we heard you the whole time. You just weren't able to hear me. But now you can hear us all. Okay, good. So keep going, John. Oh, John still can't hear me. So what were you saying, Dr. Tom?
I was just saying, John was mentioning how powerful the Fed is, and even a quarter point move in the rates. The Fed is actually so powerful, even though it's not a federal organization. It has more power over our economy than the president and the Congress combined, which are two of the constitutional parts of the government. It's the executive, the Congress, and the Supreme Court. And so the Fed has actually more power than two of the rightful parts of government that are supposed to make laws and policy.
Because Tom's talking right now. You can't hear him. You can't hear me. So. Well, no. But I don't want you to run off. But I mean, if you want to come back later, but you got to figure out what's wrong with your headset. There's something wrong.
Yeah, I could probably put on my headset.
Okay.
Maybe, this thing we've been using it for a while. It might be charged.
Okay. Well, we'll pop back in a little bit, okay?
Okay, thanks.
Excuse me.
All right, John's going to come back, so you just keep going.
Okay. Well, I think my main point was that two of the three legal constitutional branches of government can be overridden by the Fed. They have more power in the Fed than the president, the whole executive branch, and both houses of Congress. They can determine whether you get a mortgage or not, whether you get a job or not. The Fed can actually prevent the country from going to war if the Congress and the president decide we have to go to war. And the Fed, which, remember, is not a U.S. institution, it's a private institution, and a lot of the stock in it is owned by foreign bankers. If they don't like a particular war that our government feels like it should be in,
see, that's why I didn't vote for him. That's why I didn't vote for him.
Yeah, they can literally raise rates so high that we can't afford to buy the bullets and the planes and pay the guys, and they could prevent us. That's the problem of having internationalists in control of our economy.
That's not a pretty picture you paint.
No. I think about it a lot at night. I try not to worry about things, but one thing that is very worrisome is having an institution that's not loyal to or beholden to the U.S. government in charge of our economy and indirectly in charge of our foreign policy. That is not a pretty picture.
So, the one thing that allows you to get some rest at night, at least a nap, and perhaps even some peace of mind throughout the day, can be summed up in one of those four-letter words: gold.
This is true. I mean, for myself and my family and those around me, I don't worry at all because I have a huge percentage of my net worth in gold. And so no matter what happens, no matter what they throw at us, look, we've had globalists in the White House for years. George Bush is a good guy, but he was a globalist.
Maybe for the audience, just your definition of globalist.
Well, a globalist is someone who believes in a one world government.
Okay.
They don't believe in national sovereignty. They believe that the world should make the decision. So if it's up to the globalist, the UN or some organization like the UN, it started off as the League of Nations, and then they morphed into the UN. And it's a very, very dangerous organization because they are very anti-US. We fund approximately 50% of the UN, and yet they continually issue resolutions condemning us for anything they don't like, because the little tin pot dictatorships with maybe 5 million people in the whole country. You know, I've got 5 million people in my county. They, just to put it in perspective, they get the same vote in the General Assembly as the U.S. does. Now, the one thing that gives us an edge is the fact that we're one of the permanent members of the Security Council. But again, so is China and Russia. Okay, so anybody that's a permanent member can veto any Security Council measure. So basically, I think what we should do is give the UN 24 hours notice to vacate the building, and we should bomb it. Not bomb it, but, you know, get the guys in there that blow up the building from the inside out, and tell them if they want to have a UN, they can move it over to Brussels or wherever, but it's not going to stay on U.S. soil. And we should withdraw from the UN because it's never done anything good for us. We used to be on the Human Rights Council. They took us off the Human Rights Council and put one of those Arab countries that enslaves people. I'll take it in a minute. But can you imagine a nation that part of their national policy is to enslave people and sell them? Okay, they took our place on the Human Rights Council. So forget the UN as far as I'm concerned. We're on our own in this world. We could trade with people that want to trade with us in a fair way, but to let them have control over us, and now to have the Fed have such control over us. I was just listening to a book by Alan Greenspan this morning, who was the longest running chairman of the Federal Reserve System. But he himself says that our nation was in such better shape and solid for the 77 years we had no central banking, and when we were on the gold standard. This is Alan Greenspan. When he was in office, you know, when he was working for the dark side, he had to toe the line, and he would say what they told him to say. But in the books before he crossed over, and in the books he's written since, the guy makes eminent good sense. And he said, you know, without the gold standard, there is no way to protect your savings from destruction by inflation. So go to CFRNgold.com, CFRNgold.com.
One word.
And find out how to protect your family.
Hey, do you want the charts? Do you want the screen?
Yes, please.
All right, let me send it over to you.
Because what we're going to talk about is inflation, and gold is the best way to protect your family from inflation.
Okay, there you go.
A little tongue-in-cheek here.
When we finish talking with Dr. Tom, guys, I will pick up where we left off on the recap of the Concierge Trade Alerts as well as Logic 247. I can see your screen. Life was very expensive in 1955.
Yeah. Oops. It always wants to do that. Okay. So, now you remember 1955, right?
Yeah. No, I wasn't quite born yet.
Yeah. Well, I was actually born, but I wasn't worried too much about inflation at the time. But I was aware of certain things. I think I was 7 years old in 1955. But we're going to talk about what happened in the 60 years after 1955. Okay. But let's hear from some people what they were saying back in those days. Did you hear the post office is thinking about charging 7 cents just to mail a letter?
Wow. I had it's been so long since I mailed a physical letter. I had to mail one the other day. I had to go on the internet and look up what it costs to send a letter these days. Now
it's like 55 cents now, right?
Yeah, 55, that's right, yeah.
Yeah. Here's one. These are actual signs, actual ads and so on. When I first started driving, who would have thought that gas would someday cost 20 cents a gallon? Guess we'd be better off leaving the car in the garage.
Wow.
I never thought I'd see the day all our kitchen appliances would be electric. They're even making electric typewriters now.
Yeah, you know, because you write, you're a writer. I'm sure at some point in your life you used an old manual typewriter. But I was thinking about that the other day because I was talking to my son. He's never typed on an old-fashioned typewriter. But I was thinking about the corrected type. You know, those little. If you made a mistake, I mean, you had to be careful because if you made a mistake and the document you were working on was really important, you know, the corrected type, it did an okay job, but not perfect. So you might find yourself starting over a couple times. So go ahead.
Yeah. I remember doing a paper for college once, and I left out a whole paragraph on page 2, and it was a 15-page paper. So I had to retype everything from page 2 on because you couldn't just insert it. They were starting to realize that to make ends meet. Now, I promised my wife when we got married, she was an engineer and she wanted to work, but we agreed that once we had our first child, she would stay home and raise the child. But most of the women in this country, married women, work not because they want to, but because they have to.
Right.
And the follow-up to that, it won't be long before young couples are going to have to hire somebody to watch their kids so they can both work.
Yeah, that was a foreign idea back then. Now,
it was.
I was born.
Look up at the top there, babysitting, the newest profession.
Mm-hmm. Right. I was born in '59. My parents divorced when I was about 6, I think, 6 or 7. And so my mother, she had to work. She had to have a job, and we had. Now, here's. I never understood the economics or how this worked. But my mother worked in a factory, not a union factory, but a factory where I'm sure she made minimum wage and minimum wage back then was probably, well, when I got my first job, minimum wage was $1.35. I remember that quite well. So I'm going to guess maybe my mom, maybe she topped out at $1.25. I don't know. But somehow she would go to work every day for 8 hours at this factory making minimum wage. We had a maid. So I had a babysitter, but we called them, back then they were called maids. I guess babysitting was just a new term that was on the way in.
Right.
And I always wondered, because when somebody talks about, well, when I was growing up, we had servants or we had help. I mean, we had a maid, but boy, we sure, we weren't flush cash-wise. I mean, it was always a struggle. I grew up working class poor. Proud of it, but that's the truth. Working class poor. But we had a maid. I just, whatever they paid her, sure couldn't have been much.
No. Hey, look at the date on this Life magazine.
In fact, my dad managed, I remember my dad talking about, he used to be the manager of the A&P, the grocery store in our town, the Atlantic and Pacific Tea Company. I guess they're not around anymore, but it was a big deal back then. My dad managed the A&P, and when I was born, his salary was $40 a week. True story, so go ahead.
Well, I was just saying, this magazine covers dated 1957, so about the time frame we're talking about here. And there was a cover story, babysitting is the newest profession. This was a foreign idea. The idea of a woman working was almost shameful.
Right, exactly.
Her husband should make enough money to take care of the family. And by the way, that's a biblical injunction, and that our country was influenced by the Bible a whole lot back then. And the Bible says that if a man doesn't support his own family, he's worse than an unbeliever. So that was built into our way of thinking. Here's one. I'm worried that the Volkswagen car is going to open the door to a whole lot of foreign business. But then, who can afford $1,700 to buy one?
Right.
Not really a big worry.
What did an American car cost at the time?
I saw a Corvette. It was like $2,500. I bought my first Volkswagen myself, which would have been, maybe 10, 12 years after this, a brand new Volkswagen with all the accessories that had, even had a steering wheel, for $2,000. Okay. Today I pay more than that for a refrigerator.
Yeah, right. Yeah, refrigerators are expensive. Especially if you want one of those new fancy ones with the see-through doors. I was looking at one the other day. I think we were at Lowe's. You walk up to the door and you touch it, and now suddenly you can look through the door and see what's in the refrigerator on the shelf. That's the door on the right, and the door on the left, it's got a TV in it, or a monitor, or whatever you want it to be. It's got a screen.
Yeah, and it's connected to the internet. And it can even take inventory of what you have in your refrigerator. When you're at the store, you can contact your refrigerator.
There's a little camera. You can actually look around in the refrigerator too.
Yeah, it'll tell you what you need to buy at the store if you forgot to make a list. Anyway, let me get through these. Right. Thank goodness I won't live to see the day when the government takes half our income in taxes. I sometimes wonder if we're electing the best people to government. Well, a legitimate worry, because overall, when you consider all the hidden taxes, so I was talking about a few weeks ago, the government does now get 50% of the money that people that pay taxes pay. Now, of course, there's another 50% of the people that don't pay any taxes at all. So that's another story. Okay, the fast food restaurants are convenient for a quick meal, but I seriously doubt that they'll ever catch on. You see the McDonald's hamburger here, 15 cents. I remember on Dixie Highway in our town that we have sold over 1 million, and it was a big deal when that ticked up to 1 million, and it wasn't that much longer. It was 2 million, and then eventually they just stopped putting it on the sign. Today, a Big Mac is $3.99. Okay. There's no sense going on short trips anymore for a weekend. It costs nearly $2 a night to stay in a hotel. $2. No one can afford to be sick anymore. At $15 a day for a hospital, it's too rich for my blood. Try $10,000 a day today.
Exactly.
If they think I'm going to pay 30 cents for a haircut, they're crazy. By the way, this is the last actual sighting of Elvis Presley. It cost $4.47 for our dinner tonight. It's a good thing little Joey's meal was free, or it would have been almost $6 for our family to eat. Can you imagine? $1.49. This is a family in Nebraska in a fast food restaurant, and it costs them $1.49 for a meal.
Hard to imagine.
Can you believe the price of a Coke has gone up to 5 cents? Sure makes you miss the good old days when they were 3 cents. If you look down at the bottom there on the menu, ice cold pop, 5 cents. Tell you a quick little story. My dad was in the Air Force when I was a kid, and my mom would always give us a dime to put in the offering in Sunday school. We found out that the gas station next door to our Sunday school building, their machine was broken that sold Cokes. They'd just gone from 5 cents to 6 cents. And somehow you could put a penny in and get a Coke.
Wow.
So we would go over there and change our dime for pennies and drink 10 Cokes and get sick to our stomachs. That'll teach you from not steal from God, right?
That'll teach you.
I'd sure like to get one of those nice wool suits for church, but only the rich can afford to pay $29 for something they're going to wear once a week. You can pay $29 today for a tie or a belt,
right,
in a men's store. I thought about opening a little restaurant, but the wages would kill me. $1.50 an hour seems like a lot for a waitress. After all, they get tips. The actual price was very close to what you just said. The minimum wage at that point in time was $1.45. I just rounded it up. Wow, 21 kinds of soup at 10 cents a can. If I get one of each, it would cost me $2.10. Maybe I'll just get 10 for $1.
Mm-hmm.
Costs you $1 to $1.50 per can today.
Right.
Ritz crackers. I went to the store today and a box of Ritz crackers has gone up to 32 cents. Pretty soon we're going to have to decide which kid we can afford to feed. Those prices, man, can't afford to feed all your kids.
Right.
I've got a sweet tooth, but I guess I'm going to have to cut back. A Hershey bar costs 5 cents now. Those were the days. And they were bigger, by the way. Kellogg's Corn Flakes. Look at that. They talk about eat better, live longer in the ad. More punch to lunch. Another ad I saw, they were talking about Kellogg's as a main course. You know, it can replace a whole meal. It's pure sugar. Thank goodness I can still get a box of cereal for 19 cents. The kids go through a box a day. What is it now, about $4 for a box of cornflakes? The government knows families live on white bread. Why did none of the stores charge so much? 18 cents a loaf is crazy. This is Wonder Bread with a Donald Duck imprint on it. I like Donald Duck, so I chose that. So here's a summation. You see their postage stamp was 7 cents. Now, actually, excuse the mistake there. This is supposed to be 1955. It's 60 years from 1955 to 2015. So excuse the mistake there. So the postage stamp went from 7 cents to 49 cents, and it was a 700% increase. The Hershey bar we just mentioned, a nickel to 78 cents, 1,560% increase. Soup from 10 to $1, 1,000%. A Coke from a nickel to $1.49, 2,980%. Gasoline, 20 cents a gallon, an increase of 1,250%. A loaf of bread, 18 cents to $2.88, 1,600%. The Ritz crackers, 32 cents is looking pretty good right now, because today, or 2015 at least, they were $2.89, a 900% increase. The wage of the waitress was $1.45, Now the average is $10.41, 718%. Look at a haircut, 30 cents to $28. That's almost a 10,000% increase. The hotel that you could stay in for $2, $137. Cost you $2 for the bottle of water in the mini fridge now. 6,850% increase. A suit of clothes from $29 to $499, 1,700%. A stay in a hospital, this is one of the worst. Medical inflation has just outpaced practically everything. $15 for a night in a hotel, now almost $4,300, 28,000% increase. And the Volkswagen, that was $1,757, it's now $20,220, 1,150% increase. So the average is right at 4,500% more after just a 60-year time frame. So inflation is real. I mean, they keep talking on TV, well, inflation's under control. Well, why does it take today $25 to buy what $1 bought in 1933? That's 96% inflation. So, as I said, there's only one way to protect yourself from it, and that is if you go to CFRNgold.com. What do you get if you go there?
Tell them what they're going to get.
Well, you have your choice, either free or at no cost. You're going to get some very important information, articles, reports, and videos. However you like to consume your information, we've got it. And it's years and years and years of research that you will get for free. And actually what I send you is part one. That's enough information for most people to decide this is the best way to protect my family. But if you're one of those people that have a high need for information, what they call a C-type personality, we actually have a part two with even more information that we can send you. But you read part one first and then request that. And this will also get you invitations to free webinars every Monday night where we talk about financial concepts of all types, everything from real estate to how to save on your taxes to how to invest to beat inflation. It's probably the most important thing we talk about, because unless you're making at least 10% a year on your safe investments, you're actually losing money when you factor in inflation to taxes. So I don't know what time it is, but that's what I had to share today.
All righty. Well, folks, do as Dr. Tom suggests. Go to CFRNgold.com and get that starter pack and learn about investment grade gold. Thanks so much, Dr. Tom.
See you next week, everyone. God bless you.
Have a great day. Bye-bye.
You too. Bye.
All right, guys. We're going to pick up where we left off. Let me get the screen back here. That should do the trick. There we go. Okay. All right. So let's go to the S&P. And let me bring up the Concierge Trade Alerts. Okay. If you want to grab a screenshot, there you go. Put it on the right day. There we go. All right. You'll notice crude has been rolled now to the X contract. Alerts got out last night, 6:45 p.m. Eastern. For the S&P, you want to be long 3016 or above, short $29.99 or below. Okay. When the alerts come in, simple process. Go to the markets that you trade. Put 2 lines on your chart. $30.16. And the other number, $29.99. $29.99 is going to be right here. Okay. The alerts came out at 6:45, so that's 18:45. So that would be the 18:30. These are 30-minute candles. So the candle from 18:30 to 1900 hours. Okay. This is when the Concierge Trade Alerts came out. This is when you put these 2 lines on your chart, and then you sit back and wait. Everything between these 2 lines is simply the market making up its mind what it's going to try and do. Okay? The first trigger comes on the short side. There are days when we have two-sided action. That's a term I learned from Mike Reed. Two-sided action, which means we trigger both on the short side and the long side. Okay? So when we trigger here at $29.99, what's the market trying to do? What is price trying to do? Well, since price is always trying to get to a weekly trading zone, you can see that price, I mean, when we trigger here, you got a red candle and a doji and a red candle and a red candle and a red candle. And this thing triggers. To the naked eye, does it appear price is trying to get to this zone or this zone? You got it. Yes, trying to get to this zone. Did it? Did it accomplish its task? Did the mission it was on to get to the zone below, did it do it? It did. Beautifully. Okay. So from $29.99 to $29.95, that's a 4-point move. The market made 4 points available and at $50 per point, $200 per contract traded. Okay. Now, when you enter here, this is a realistic expectation. Could it perhaps slice through here and go to the zone below? It could. Okay. But that's not the high probability thing at the time of trigger. If this candle had closed below the weekly trading zone, then a continuation down to this zone would be the high probability move. Okay? All right, so what happened? We touched the zone, we spiked the zone. Now the spike goes all the way down to $29.91 and a quarter. I'll call it $29.92, round it up. That's a 7-point move. But we all know that it's very difficult to get out of the swing high or swing low because you don't know it is such until after the fact, right? Okay. So it reaches down, it does what it was trying to do. It found good support at the zone. When price drops to a zone, we expect it to be good support till it isn't. When price rises to a zone, we expect it to be good resistance until it isn't. Okay. So once we touch this zone, get back above the trigger here, and we don't re-trigger. Now, this initial trigger right here, we dropped to 97 1/4. So that's like a 1 3/4 point move. Then it's back above the trigger. Then we trigger again to catch that 4-point move. Now, once this green candle closes back above the trigger, we go sideways, we start to move down. We don't trigger again. At that point, the chart is telling us that as certainly as price was trying to get to the zone below over here, it's now trying to get to the zone overhead. It did. It got there. It consolidated. Okay? These are 30-minute candles. So imagine right here, this little red candle where the body of it is inside of that zone, 3013 to 3014. There are 6 5-minute candles inside of a 30-minute candle. One, 2, 3, 4, 5, 6, 7, 8. We actually had 8 5-minute candles print right inside of the zone. Okay? So that's something you kind of have to keep in mind when you look at a 30-minute chart. And you see that. First glance, you might go, well, that's not a lot of consolidation. Well, a lot happens inside of a 30-minute candle. So always remind yourself that, now, if we want to get crazy, go to a 1-minute. Look at that. Consolidation. The most likely thing to happen when price reaches a weekly zone. Okay? All right. So back to the 30-minute. Okay. So price up to the zone, consolidates, and then shows its hand. It's now trying to get to the zone overhead. So what is overhead? After 3013/3014, the next weekly trading zone overhead is 3019 /20. $3019/3020. Okay. So when we get a trigger at 3016, which is this line right here, down here it was okay. So when price shows us that it's trying to get to the zone overhead and triggers at 3016, how much room to run do we have? Well, since we anticipate this zone being a good resistance, which it was, 3 points. Now we spiked up to 3024. So that's an 8-point move, 8.5-point move. But again, difficult to get out at swing highs and swing lows, because you don't know it is such. till after the fact. Now, this would be wide-ranging consolidation. What does that mean? Well, compared to this consolidation, right? This whole 30-minute candle, the body of it's inside that zone. We spike above and then below and then above and then below. But you notice each one of these candles is attached to the zone. Oh, and what I mean by that is it's physically touching the zone. So I don't consider it as having passed through the zone and set its sights on the zone above, which I might as well stick up there, 3031/32. Now remember, the zones go out to the partners and passport holders every Monday morning, 6:15 a.m. Eastern. And what the zones do at the beginning of the week, when you put them on your chart, it creates a framework for the entire week. As a kid, you probably did some of those paint by numbers works of art. Yeah, they never came out too good, did they? Mine never did. Maybe yours came out better. So we put this framework on our chart, the zones. We anticipate that price will stay on the playing field inside of that framework throughout the course of the week, and it usually does. So what we're waiting to happen is for price to come along and just fill in the blanks, zone by zone by zone. Okay. Now, if we add one more element to our chart, this helps us better visualize at any given time what price is trying to do. Once you understand our methodology and once you understand the indicators and how they work and how they show up and all of that, you can pretty much navigate without them almost. But after all these years, I prefer to have them on than off. Okay? So as price gets below the BBC, anytime price gets below the BBC, that's the green line, just stands for bull bear cross. When we're above it, whatever time frame we're looking at, we're bullish. In other words, we anticipate higher prices. When price gets below it, no matter what time frame we're looking at or what market, if price closes below that BBC, we anticipate lower prices. Okay? So when this red candle closes below, now remember the alert went out on this one, what time did I say? 6:45 p.m. It didn't, so that's 18:45. It didn't trigger until 23:30, almost midnight. Okay. But as soon as it closes below here, see the alert came out on that candle right there. That's when I published last night's Concierge Trade Alerts. It's almost always sometime between 6 p.m. and 9 p.m. Eastern. They show up in your email and also in the Telegram channel. All right, so it closes below. The market just told us, I'm trying to get to that zone below. Okay, great. We'll be waiting. So down we come, we trigger, we get to the zone, we find good support, we spike it. Okay. The zone holds. The zone holds more often than it doesn't. Okay. When this candle closes above the BBC, over here it closed below, we anticipate lower prices. In other words, we expect price to try to get to the zone below. And then when we close above it, well, now we anticipate price trying to get to the zone overhead. Pretty simple, right? It really is. Trading is not easy. Never has been, never will be. But this does make it simple. Okay? Now, we get above, we anticipate exactly what happened. We trigger, go to the zone. That's what we anticipate. When price can't go beyond this zone, again, everything's touching, right? Price only goes sideways for so long. It can often go sideways longer than you think it will, but it does, and it can. So if it can't go any higher, it's going to go lower. Consolidation. Not enough of the right stuff to break it loose to get to that zone up overhead at 31.32. So we anticipated doing exactly what it did. So it's going to go back to the zone below, which again we expect to be good support till it isn't. And currently it is. So we had our first trigger here, 30.16, up to the trade 2 target at 30.19, 3 points. We get back below the trigger, and we run up to 30.19 again. That's the second trigger. And then we drop below the trigger again. On this one, we spiked down, touched the BBC. When we approach the BBC from above, we expect it to be good support till it isn't. When we hit a weekly trading zone from above, we expect it to be good support until it isn't. So this is potentially good support 2x times 2. Okay? So now, are we going to go back up? Are we going to trigger and head back up? I don't know. It's a very important thing to understand. I don't know what's going to happen next. You don't know what's going to happen next. All the people who tell you that they or their program, their software, their indicators, their oscillators, their algorithms know what is going to happen next, either they're trying to fool you or they fooled themselves. I found that to be the case. Sometimes people aren't intentionally trying to mislead you. They've fallen for their own line. They actually believe it. So, in Genesis, you'll read, when God created the heavens and the earth, and Adam and Eve, and all the little animals, he made a conscious decision not to give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. No man, no machine, no algorithm, no indicator, no oscillator, not nobody, not no way, not no how, can consistently tell you what's going to happen next. We can all guess and be right some of the time. Maybe even 50% of the time, right? What we can know, what God did give us the ability to understand, is what the next high probability thing is. And that doesn't just apply to trading, okay? In any area of your life, you walk into a store, you observe, here's some kid over here with a hoodie slipping a candy bar into the hoodie pocket. You catch that out of one eye, and out of the other eye, you see the clerk reaching under the counter for a baseball bat. You with me? Can you figure out what the next high probability move is? It probably looks something like the clerk tapping the bat on the counter and saying, put that candy bar back. Or the clerk pole vaults over the counter, bat in hand, and chases said hoodie wearer out the door. Whether or not he gets the candy bar back, I don't know. So this ability God gave us to know what the next high probability event is, that's every area of life. At church, the service starts. The praise and worship leader takes the stage, pulls the mic out of the stand. What's the next high probability event? What's going to happen next? Well, all goes well. The band will start to play. The singer will open their mouth, and beautiful music will come out, right? So simple, right? Now, because I've put this in your head, everywhere you go today and the next couple days, every time some scenario starts to unfold, whether it's your kid coming home from school with some big excuse about why they're late, or any other mundane, ordinary, day-to-day event, you're going to go, oh, I know what the next high probability thing, I know what the next high probability thing is here. And then you'll watch it unfold. It will seem uncanny how often you are correct. There'll be times when life takes a detour. There's a turn coming that you didn't see. Perhaps you misread the scene or the actors in the scene. But more often than not, you'll nail it. If you find yourself in a situation or a scenario where you don't instinctively know what the next high probability event is, keep your hand off the mouse. Right? Okay, what's happening right here? What is price trying to do? I think we all know. It's trying to get back to the zone overhead. Price always reverts to the mean. That's the BBC in our case. It did it. We had a leg and a retracement to the BBC, and then we shot back up. Even though this is a red candle, it is a bullish candle because of the context. Visually, you can see it's bullish, this wick, right? All right. So we got a trigger at 3016. We've already touched 3016. Radio freebie, 3017. Oh, Alan, I saw your question there about the Canadian dollar, and I will do that here in just a bit. I want to just fly through the rest of these. I put a long explanation behind the S&P. I'm just going to show you the numbers and show you what happened on the other ones. I won't go through this detailed explanation. 3017 to 3019. Now, where'd my mouse go? There it is. Am I telling you what's going to happen next? No, because I don't know. I couldn't. How could I? I don't know what's going to happen next. But I do know that the next high probability thing, based on a number of factors, support, the wick, the trigger. I know what the market's trying to do. It's trying to get back to the zone overhead. Price is always trying to get to a zone, either the one above or the one below. Right now, trying to get to the one above. It could fail. What would cause such failure? Only one thing has the ability to turn the market. one thing. Buyers and sellers. If there are more buy orders in the order flow than there are sell orders, price is going to go up. If the order flow has more sellers than buyers, price is going to go down. This will help you to understand, aside from the Genesis explanation I just gave you. This represents all the buyers and sellers around the world currently trading the S&P 500 Emini Futures December contract. Any one of these participants who has the ability, in other words, account size, any one of these folks could put an order in to buy 1,000 contracts or sell 1,000 contracts. What they're going to do is unknowable. You cannot know what all the participants are thinking or planning. It's unknowable. But man, in his infinite wisdom, has come up with all kinds of methods and analysis and indicators and oscillators and strategies and whatnot to supposedly know, before these people even know, what they're going to do next. It's unknowable. 10 traders could show up in the next 30 seconds representing large institutions, and for whatever reason they get all, slap down huge buy orders. You think that's going to send the market higher? Absolutely. If it outweighs the selling pressure. And the reverse is true. If a horde of sellers show up and put up large numbers of contracts that they want to sell, you can either sell to open a trade or you can sell to exit a trade. The motivation behind why you're selling doesn't matter, because if you're selling, whether it's to enter or exit, that puts you in this column. And when the tally in this column exceeds the tally in this column, price is going down. What you're looking at here is the only thing that can move the market. Buyers and sellers. And when you hear me say that, the BBC holds more often than it doesn't, well, that's a fact. However, the BBC did not hold the market up. This weekly trading zone here, we expected it to be good resistance. It was good resistance. When it came back, we expected it to be good support. It was good support. But not because I've got some dotted lines on my chart. It's because buyers and sellers made conscious decisions to do what buyers and sellers do. That sent the market up. That sent the market down. That sent the market back up. Now, someone who doesn't have a whole lot of experience in the markets, it would probably be pretty simple to convince them that I do know what's going to happen next, because of what I just said and what I just showed you. There's a whole lot of that going on out there. New people are coming into these markets every day, would-be aspiring traders, hungry for information, just like I was back in 2005, 2006. Soaking it up like a sponge. Looks a little bit complicated, looks a little bit hard. But then you come across a website of some guy, oh man, how fortunate that you found the one guy who actually does know the future. And for $99.99, you too can know the future. It's a sad testament of our industry, but it's true. Don't let it be you, okay? All right, we got to get shuffling here. Order flow is the only thing that changes the direction of the market. When you have an equal amount of buyers and an equal amount of sellers, or I should say equal buying pressure and equal selling pressure, you get this. For 30 minutes, for 30 minutes, there seems to be a hitch in the giddy up of my chart here. Okay, we got a 5-minute chart. Okay. Consolidation. Okay. There's equilibrium. The buying pressure and the selling pressure are about the same. So we roll sideways. And then in this candle, somebody's, institutions, whatever, tipped the scale. On this candle, there became more buyers or more buying pressure in the order flow than there was sellers or selling pressure. So the market went up. Okay, you got it. I know you got it. So let's move on. Let me go back to the 30-minute chart. Hopefully today hopefully I've said it in a way that really clarifies it, because the last thing in the world I want to do is create more confusion for anyone. Our whole goal is to simplify things, okay? But I really missed my mark, apparently, on explaining this properly before. Hopefully today it's clicking, clouds are parting all over the world, and people are going, oh. Now, I know some people already understood it, but as I found out yesterday, some people didn't see the follow-through, all right? Hopefully today makes a difference for you. All right, we got to move on. And again, a high probability thing is for price to go from 3017 up to the zone overhead. What would change that narrative? Price getting below this zone, price getting below the BBC, and closing there. See, this candle, it passed through the zone, it passed through the BBC, but it didn't close, it popped right back up. Kind of like trying to hold a beach ball underwater in a swimming pool. One of those blow-up balls. Try to hold it underwater. If you take your hand off of it for just a second, pops right back up. Okay? So one of two things is going to happen. Price is either going to make a real attempt to get to 3019, or it's going to get below the BBC, close there, and then price will be on a journey to get back to here. Okay? All right, let's go to the Dow. I don't know why my chart's choking up. I don't see a huge amount of volume. Maybe I need a reboot. Well, I'll have to do that after the show. All right, let's try. All right, here we go. Now, have I updated these zones yet? I don't think I have. Okay, we got a zone at 27,140/145. The zone below that, 26980/85. Okay. So what price do here? It went from zone, down to the zone, tried to get back up to the zone, went back to the zone, back up to the zone, down to the zone, back up to the zone. Any of you that play a musical instrument, if you know how to read music, if you can take a piece of sheet music and just read that thing and hear the music in your head, even if you don't have an instrument, you can look at sheet music and you can hear the sound in your head. That's what happens to me when I look at this. I can't read music, but I can read a chart, a price chart. Last night on the Concierge Alerts, Dow, consider being long, 27195. 27195. That's going to be right there. Okay. Swing high, 27,262. So 262 minus 195 at 67 points of $5 a point. Roughly $300 per contract traded. If you've earned the right to trade 10 contracts, it's a $3,000 move. Okay. Now, on the short side, consider being short at or below 27040. Okay. That's going to be right here. All right. And the alerts came out on that candle right there. This is when the alert hit your inbox, and I posted the numbers in the CTA channel on Telegram. And it said, consider selling 27040. Before it even triggers, we know that if it triggers, our reasonable expectation of profit is a move to the zone below where we expect it to be good support. And it was. Yes, we spiked it quite a bit. But you'll notice every one of these candles is touching the zone. Okay. So from 27040 down to 26985, that's 55 points at $5 per point. That's like 275 bucks. Now we went much lower, and we went all the way down to 26,900. So that'd be 140 points. But getting out at the swing low is tough, right? Two-sided action. Nice tradable opportunity here. Nice tradable opportunity here. Now, Is there a zone overhead? Of course. And that zone would be 27235. Two 7235. Oops, I'm sorry. That hurt. 27240. Okay. So up to the zone from 195 to 235, that's 40 Dow points at $5 a point, $200 per contract traded. We trigger, go to the zone, get back below the trigger, go to the zone again. Okay. Now when I add this visual aid helps us to see price gets below the BBC, we anticipate lower prices. Here comes the trigger. Here price is above the BBC, we anticipate higher prices. We expect this to be good resistance. It was. As we pull back to the BBC, we expect that to be good support. As we pull back to a zone, we expect that to be good support. So far, they both have done what we anticipate them to do. They don't always do what we anticipate, because if they did, that would be called knowing the future. We can't do that. Okay. All right, Russell. Long 1576. Maybe we're going to move quick now. 1576. So there's your trigger, 2 points above the zone. Takes you to the zone, 1586.87. So this zone is valid for this week, 73.74, 62.63, 86.87. 92. Okay, so these are this week's zones that went out Monday morning, 6:15 a.m. Eastern. Consolidation, down to the zone, consolidation. Try to get back to the zone overhead. Zones are an area. Sometimes this will happen. You'll come up shy. Here, we have a slice. We slice through it like it's not even there. When we got to the zone below, market ran out of steam. So we pull back up to the zone we sliced through. It failed to be good support on the move down. Will it serve as good resistance on the way back up? Yes. Consolidate. Continue in the direction of the slice. Okay. All right. So from 76 to 86, that's 10 points at $50 per point. $500 per contract available. Maybe you can spell it right. Contract. Okay. $500 per contract available. Right? For the trader who has earned the right to trade 10 contracts, that's a $5,000 move. That this one alert right here could potentially pay for your passport in full. I don't know what else to say. That's good, right? I think so. Okay. All right, so be long 1576, be short 1571. All right, so 1571 happened right here. A little crowded, but that's where it took place. 1571. 2 points below the zone. All right. And from 1571, we made it down to 1564. Okay. All right. Let's go to gold. Are these this week's zones? Nope, I've not updated this chart yet. $14.88. Oh, come on. 14.88. 14.89. Price was definitely trying to get to the zone below, but it didn't make it. Didn't have enough of the right stuff to push it all the way down. That happens. That's the truth about trading. And that's where a lot of people get hung up. Maybe you've been working on some methodology, some strategy, whatever it is, and you've been led to anticipate that price is going to go to the zone. So this time it doesn't. I mean, you watch this thing, whatever this thing is, you watched it do what you created it to do 10 times in a row. And then this time it doesn't. And I've heard this said so many times. Well, back to the drawing board. I'm like, what? What do you mean? Well, I mean, yeah, it worked 10 times in a row, but it didn't work this time. I want something that works all the time. The only thing that works all the time is price itself, the market. Man, your machine is capable of creating something that quote unquote works all the time. And I'm telling you this, rational adults, I try to explain to them, no, don't go back to the drawing board. What you've put together here looks pretty good. You know, hang in there. Understand it's a business based on probabilities. If you understand that sometimes it's not gonna work, it won't freak you out. You expect it, you anticipate it, it's built into the model, and it's the truth about trading. Okay. All right, so gold last night, I consider being short, 1510. And 1510, hang on. I'm sorry. Let's try that a little differently. Gold, long 1510, short 14.99. Okay, all right. So 14.99. Now the zones came out on this candle. 14.99 showed up on the next candle. 14.99, and we put in a swing low at 14.96.3. So it's $230 per contract traded. On the long side, a lot of two-sided action last night. So 15.10 up to 15.12, $200 per contract traded. In queue. Hang on. I addressed that zone. 88.89. The next zone overhead is 1501 / 1502. And then the zone above that is 1516 / 17. So we went from zone down to the zone. Right here, the market showed us that it's trying to get to that zone overhead. Price rarely moves in a straight line like it did here. Or I shouldn't say rarely. Typically, price doesn't move in a straight line. It does something like this. Leg retrace, leg retrace, leg retrace. It winds its way up to the zone overhead. As long as price continues to close above the BBC, then we continue to anticipate price going to the zone overhead. Now, because of what happened here, the market has placed an obstacle in its own path. Whereas over here, price kind of just had a clear shot to just race right up to the zone. Now, because of the pullback, it has to deal with this obstacle. This is good resistance until proven otherwise. How do I know it's good resistance until proven otherwise? Because we can see green, 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 the green, 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 and then price couldn't go a tick higher. It got to 1512.1, and there wasn't enough buying pressure on the buy side of the order flow to push it even one tick higher. So it had to retrace, regroup, gather up some energy so that it can try it again. It might go ping, ping, ping. I mean, it can bounce around back and forth from support to resistance, to support to resistance. And then at some point, it manages to break through, which takes it to the next obstacle or good resistance. Okay. Now, this is important too. The price at which the bearish cross happened, 1509.3. You anticipate, even before we got stopped in our tracks here, as we're moving up, when you look left, you're just going to see this zone overhead and what has already been good resistance. It was good resistance for 1, 2, 3 hours, right? But right here, the price at which the bearish cross took place when we were moving down versus now when we're moving up, you need to expect that to be good resistance until it isn't, okay? So it made a run at it. It managed to get just a little bit north of it, a couple points, but couldn't do it. Pull back, regroup, make another run. Now, from where this sits, what's the high probability move? High probability move is from here back up to that area of resistance. Okay. So radio freebie, 1510 to 1512. Okay. Now, does that mean abandon ship at 1512? No. No. There's really no reason to abandon ship until the chart tells you to. However, we also teach you to have daily goals and to reach your goal on a consistent basis as a barometer, as a measuring stick of your progress. So if you want to take profit at 1512, you certainly can. It's discretionary trading. You can do anything you want. If you get through 1512 and you expect 1516 to be good resistance, you can take profit the second you hit 1516. Or you can see what happens. Price might slice through it. You start picking up momentum as we overcome this obstacle. We're picking up momentum. Just rip right through that thing. Like it out. Again, it's up to you. You get to make that decision, okay? All right. Next zone overhead is going to be 23, 24. So if price were to pick up momentum and it were to slice through here, first obstacle in our path, only obstacle, right there. Once that obstacle is overcome, if it's overcome, then our trade to target is 1523. Okay. All right, one more. In Q. Let's see, 7861. That's valid for this week. The next one overhead is 31/32. And the one above that is 7968. /69. Okay. Last night's Concierge Trade Alert for the NQ. We want to be long 79.36, short 78.80. 78.80 is right here. Our trade to target is 78.62 below. That's an 18-point move at $20 a point. $360 per contract traded. The reverse of that, 79.36. That's going to be right here. All right, 79.36. $68 minus 36. 32 NQ points at $20 a point. That's a $600 per contract move. If you've earned the right to trade 10 contracts, it's $6 grand. Okay. It became obvious here. Price was trying to get to the zone overhead. It got there. It consolidated. And then we triggered. We anticipate this is going to be good resistance until it isn't. Just like this was good resistance until it wasn't. It was. As we come back, we expect this to be good support. It was, it still is. So if we come up and trigger again, is that still valid? Sure is. If you wanted to scoot it up a couple points, you could do that. Now, this red and falling CFMA1, that could turn into good resistance. So if you wanted to be terribly clever, you could enter on the other side of that red and falling CFMA1. Now, as we waddle sideways, this is going to come down, right? So this might come down. The idea is let price get on the other side above that red and falling CFMA1, then go long with a trade 2 target at 79.68. Kevin, zones work on the SPX. Well, Kevin, yes. However, I don't do them for the cash index. So let me just show everybody what you're talking about. Uh-oh. I definitely must need a reboot. What I got over here? Got anything? Not responding. All right, let's get a second to see if it responds. Yep, maybe it is. So in answer to your question, Kevin, the question was, would that apply to the SP? It would, but I would have to do the numbers specifically for the cash index, because the cash index, the difference between it and the futures price, when a new contract comes out, like we just rolled into the December contract, at the beginning of the life of that contract is where you'll see the greatest distance between the price of the cash index and the futures price. Then over the life of that contract, the two kind of come together, and by the time a contract expires, they're almost, tick for tick, the same. Okay. So I thought my chart was going to come back. Let's see if we can do it this way. Okay. There we go. All right, put this on 30 minutes. This is a great question. I'm really glad you asked. So currently price on the cash index. Now, you can't buy or sell the cash index because it's an index. It's representative of 500 large cap companies, blah, blah, okay? Man wanted to trade this index, so derivatives were created, and of course the futures are the derivative that we trade. And the derivative, or the index price right now is 30.11. The futures price is 30.12. 30.13 and a quarter. 30.13 and a quarter. Futures. Cash index 30.11.2. Okay. So the answer to your question is yes, Kevin. I would just, if I were going to do it for the index, I would use the index prices. So hopefully that helps. All right. Okay. All right, we've covered all of these from the concierge. Let's take a look at logic real quick. Okay, for the week. Week 59, up through 1:30 p.m. today, we've issued a total of 38 Logic 247 alerts. Logic 247. Those alerts are based on current price behavior. Those alerts come out around the clock as opportunity develops. Concierge is a static report. Comes out once per session, shortly after the Globex Open. those numbers are good for the entire session. When you have a situation where the CTA and the Logic 247 are pointing at a specific price or area, bullish or bearish, that deserves a second look. Okay, really important. So far this week, we got 10 never triggered. That left us 28 actionable alerts. 23 of those found a price target. 5 of them have been stopped out. So this week, 18% of actionable alerts have been stopped out. 2 weeks ago, it was 0. Last week, it was 10%. And I told you, as it happened, that this is not a normal week. 0, 10%. What we've averaged over the last 59 weeks, 58 weeks, is 20%. On any given week, whether it's a week that we have 29 alerts or 109, the average is 20% of those do get stopped out. Okay? All right. Now, so far this week, we start Sunday evening, 6 p.m. Eastern. That was last week, week 58, 10%. Okay. So the first alert in Logic for the week was stopped out. So this is all Sunday night. So for folks who think the market's open Monday morning at 9:30 a.m. Eastern, wouldn't they be surprised to see this? So while America was sleeping, we were busy. This is all Sunday night. Here's Monday. Tuesday. Wednesday. Today. Thumbs up means we found a price target. Red X means stopped out. And Z's means it just never triggered. Okay? All right. So we've covered the CTAs. We've covered the Logic. Bruce asked, Dwayne, what would be a large position in SFEG? Bruce, help me understand what you mean by a large position. I mean, I can give you my thoughts, give you my opinion, but I want to better understand. I suppose it's relative to whatever a person's... I think I'm not understanding your question right. So I'll just give you a few minutes to retype it. I guess to some people, 1,000 shares would be a large position. And for some people, 500 shares would be a large position. And some people would, they would need 1 million shares to consider a large position. I don't know if that answers your question or not, but those are my thoughts. Okay. I do know if I had an extra 100 grand lying around right now, I would scoop up 1 million shares. But I don't have it laying around. I left it in my other pants. No, but honestly, if I had it, if I had 200 grand laying around, I would put 100 into Santa Fe and I'd put 100 into Bitcoin. No, I take that back. I'd break it up into thirds. Third for Santa Fe, third for Bitcoin, and a third for carrot bars. Okay? I'm losing my voice here. I don't know what's going on. Sorry about that. Okay. All right. Bruce says I answered his question. Perfect. My throat's giving out, guys, and I got workshop tonight. So let's skip to the good word for the day. And if you have any questions, you can always hit me up in Telegram, and I'll be happy to work with you. I just need to stop talking, I guess. All right, we've been talking about overcoming stress for a week now. Today, we're going to talk about your convictions. Establishing your core convictions. Sometimes when people say, what do you believe about such and such? It dawns on you that you really don't know what you believe. In that kind of a situation, we typically parrot what we've heard somebody else who we respect, whatever they say. If they made a strong statement about anything, political, whatever, and we didn't really have our own opinion, we would just tag along with them. Oh, yeah, that sounds good. Yeah, well, I believe what he believes. You do yourself a great disservice when you do that. Daniel 1:18, or Daniel 1:8. Daniel resolved not to defile himself with the royal food and wine. So what was Daniel's problem? What was wrong with eating the best food in the country? Most people back then lived on a very meager diet. Not because they wanted to lose weight. Well, you understand. So here you have people just trying to survive, to get enough food to eat, to live. And Daniel, on the other hand, has the opportunity to eat like a king. So why the hard line? Why did he say no? When you dig down into the cultural realities of the situation, it seems to be that there's more at stake. A Babylonian feast was always eaten in honor of the gods. So whenever you sat down to a meal, it wasn't just dining that you participated in, it was an act of worship. This food had previously been sacrificed to a pagan god. For a Jewish teenager who took his faith in God seriously, participation would mean compromising who he was called to be. By eating their meal, he would be worshiping their God. And for Daniel, that was a bridge too far. It was about compromising his character, and he just wasn't willing to do that. You don't discover your convictions when the pressure is on. You decide them in advance. It's during the good times that you determine what you will or won't do during the hard times. The psalmist said in Psalm 119:9, "How can a young man keep his way pure? By living according to your word. I seek you with all of my heart. Do not let me stray from your commands. I have hidden your word in my heart that I might not sin against you." So let me back up and read this part again. You don't discover your convictions when the pressure is on. You decide them in advance. The parallel to that in trading is you don't make important decisions when there's bullets zinging around your head, when you're under fire. Okay? There's two people on a battlefield. One is you or me down in the trenches, okay, doing hand-to-hand combat on a 30-minute chart. The other fellow on the battlefield would be the general. Do I not have a daily chart? That's what I was looking for, a daily chart. Oh, we'll do this one. Yes. Okay. This is the general up on the hill in the tent with a brandy sniffer. and a cigar. Got the maps laid out. Calm, cool, collected. Just, trying to make the next right decision for his men. Where to send them. Go here or go there. Daily chart. 30-minute chart. Hand-to-hand combat in the trenches. Now, the idea here is that you want to make, okay, so when price pulls back to a weekly zone, and then you get an up close or a green candle, you want to already know what your next step is going to be. Whatever set of conditions the market hands you, and there's, it's not an infinite variety. Everything will fall into a couple of different categories. So I know you've heard this before. I know it sounds a little, plan your trade and then trade your plan. It sounds very simplistic, but a lot of folks struggle with that. They have no problem with the plan your trade part. It's the trading the plan part that seems to be an issue. See, when Daniel was presented, he was probably hungry too when they offered him this fine food. Had he not been sure of his convictions ahead of time, he very well might have been tempted to eat that food, to participate, to partake, to bow down to false idols. But he knew who he was going in, and he knew whose he was going in. So he didn't have to make a spur-of-the-moment decision. It was already written on the tablet of his heart. He would not eat food that had been sacrificed to pagan idols. When the opportunity presented itself, he didn't have to think about it. He had already made up his mind. He knew what he believed. He knew what he was supposed to do, when he was supposed to do it. And he did it. That's the moral of this story and this scripture. Victorious Christian living is encapsulated in these three statements. Number one, by living according to your word. Number two, I will seek you with all my heart. 3, I have hidden your word in my heart. Again, the psalmist said, how can a young man keep his way pure? By living according to your word. I seek you with all my heart. Do not let me stray from your commands. I have hidden your word in my heart, that I might not sin against you. Psalm 119, 9 through 11. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866 888-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.